How's the Europe overall figuring out the problems they have gotten into? Well, Europe's cup of woes is clearly spilling over now. The economy is in a bad shape. For weeks, we have been talking about an impending recession. Now, we can tell you Eurozone is sinking. The euro is Europe's de facto currency and it has dropped to a two-decade low. European economies, they are in dire straits. The global recession we have been all worried about could start very well in Europe. So we all talking about euro now, and they say the strength of a currency reflects might of a nation. But the euro is not just any currency. It is identity of a united Europe. Europe has 27 countries, 19 of them use euro as their currency. The bunch of 19 is called Eurozone, and they all are struggling now. The first big fall came in July. Euro hit parity with the dollar, meaning 1 euro was equal to $1. This happened for the first time in 20 years. For perspective, last July, 1 euro was $1.2. So last month, it hit parity for the first time, and now euro has sunk further. And today, it is cheaper than dollar as well. And it's a sign of economic distress, clearly. But why is euro losing its value? Because European economies are struggling. They are facing three major challenges. Number one, energy crisis is there in Europe. Number two, the high inflation in Europe. And number three, political turmoil they are facing. In one of the biggest economies in Europe, it is happening. Europe was already fragile after pandemic, and these three problems have worsened situation there. Now, first, energy crisis. It could single-handedly ruin Europe's economic future. It's how it began. Russia invaded Ukraine. Europe sided with Ukraine. It backed in sanctions against Russia. Russia struck back and disrupted gas supplies. We'll come back to you, Mr. Spivak, on Europe specifically now. Well, we have seen euro getting into parity with dollar. Gas supply is a problem, and winter is literally coming. So is the winter coming for European economy as well? What's your take there?
I think we're seeing quite significant weakness in continental European growth. I think there's no question there. The numbers just over the past day that we've seen, the latest from Market Economics and S&P Global, the latest PMI surveys, they've suggested that the situation is quite weak indeed. I think one of the main challenges facing Europe and European assets is, of course, the inflationary consequences of the surge in energy costs and the inability of the ECB to readily address that, or as readily, certainly, as, for example, the Fed or the Bank of England. This is because we, of course, have very different fiscal and debt situations in the south and in the north of Europe as ever. So if the ECB and when the ECB raises rates, the concern becomes that at these higher rates, countries like Italy or Spain might become vulnerable to funding stress. This resurrects concerns about the Eurozone debt crisis and puts the ECB in a bit of a tough spot. On the one hand, they need to raise rates in order to combat inflation and put consumers back on better footing. On the other hand, they don't want to risk another debt crisis. So we're going to see how things develop here over the coming months. But the upshot is that the ECB will have less room to tighten than will other major central banks. That should continue to weaken the euro against its major counterparts. I think where there may be a bright spot for the euro, we might see one against the more risk-sensitive currencies, the Australian dollar, the New Zealand dollar, around a situation where global tightening and indeed that risk of global recession generate market-wide risk aversion. That tends to benefit the euro against more cyclical and commodity-oriented currencies.
WION now available in your country. Download the app and get all the news on the move.